Hello, good afternoon, everyone. Thank you for joining us today. I'm very excited about our guest host. His name is Jason Sallman. He'll be covering some information on cryptocurrency. Many people don't know you can purchase cryptocurrency using self-directed IRAs. This is something you can do with the help of having checkbook control by creating an LLC. You have complete access to your IRA funds. And then you can use those funds to move that money into whatever wallet you choose, trade different types of crypto. But he's going to cover in more depth about just crypto in general and blockchain. Just a few things to cover before we do get started. Here at NewView, we are non-fiduciary. We are not lawyers. We are not CPAs. We do not give you any advice on what is a good or a bad investment. It's really up to you to do your own due diligence. NewView has been in business since 2003, so a little over 17 years in business. Our main office is in that picture. We're located in Longwood, Florida. We have about 50 employees staffed here at NewView, and we have a compliance office located in South Dakota. We custody about 1.5 billion in client assets. One of my favorite things about NewView is we are actually graded on our responsiveness. We average about 99% of the time answering the call with a live person, which is a great average. We prefer you do speak with a live person when you call us. We don't like to leave you on hold. If you were to leave us a voicemail, we will get back to you within that same day. If you send us an email, we will email you within that same day, as long as it is within our operation business hours. We are simple to do business with. We're available, we're responsive, and we love to build relationships with people just like Jason, our guest host today. So a few things about Jason before we get started. Jason is the founder of Sallman Group, LLC. He worked with businesses, governments, and individuals alike to discover the future of blockchain technology. So with that being said, I'm gonna go ahead and give it away to Jason Sallman.
Thank you so much. And yep, super excited to be here and to have the opportunity to just explain a little bit more about Bitcoin, cryptocurrency, and blockchain. So let's get into it. So first off, I'm definitely not your financial advisor. This is not financial advice. I'm really here just to help you, educate you. I'm not offering any investments. I'm not telling you what to invest in. I'm just simply here to help educate. Just a little bit about me. I got my bachelor's degree in marketing from the University of South Florida. Go Bulls. Live in Tampa Bay, Florida. I'm a former high-end metals dealer. I think that actually helped bring me to Bitcoin and cryptocurrency because there's some likenesses within the two. And I think originally I was very much a naysayer about it until I did my own research. I've read over 30 books on Bitcoin, blockchain, and cryptocurrency, hundreds of research papers on the subject. So I try to keep as well versed as I can. Space is moving very fast, but just try to stay on top of the whole thing. I'm the former VP of marketing of a blockchain innovation hub right here out of Tampa Bay. Like he said, the current founder of the Sallman Group. I do blockchain and cryptocurrency consulting. I've had the opportunity to work with multiple businesses, governments, and individuals. So we're going to go over today, we're going to go over some of the history of Bitcoin and blockchain technologies. We're going to do a little bit more of a blockchain deep dive. I'm going to talk more about how this is disrupting the space and how it's kind of changing the game for a lot of people. We're going to go over ways that investors might be able to take advantage of it, and then just some resources and Q&A. If you guys have questions, you can just save them till the end. We'll try to answer as many of them as we can. So let's get into it. So the history of blockchain technology, it really first came about as a concept in 1991 by Stuart Haber. Then it kind of evolved, and you saw people like Wei Dai, well-known computer scientists, come out with concepts like B-money, and then a future evolution into a new project called Hashcash and BitGold. So while these predate Bitcoin, and they do share a lot of similarities with it, they did have some traction in their time. There were some big investors like Visa and MasterCard who are looking at some of these projects to possibly be the future of internet money. At that time, especially credit cards really hadn't broke into that online space. And so they saw future potential in this, but didn't really know how to execute it. And some of those projects ended up falling apart, whether it was due to management or more specifically, like issues with proprietary on it. So going forward, in 2008, Satoshi Nakamoto releases the Bitcoin white paper. This was what is built on top of blockchain technology. And this was pretty groundbreaking at the time. It was announced in essentially a small forum that's specific to cryptographers, where he was, bringing it up as an idea and mentioning something he was working on. So who is Satoshi Nakamoto? This has been a Time magazine cover. This has been a big piece of lore and news in the cryptocurrency space for a long time. And so the first thing is, no matter what anyone tells you, no one actually knows who Satoshi Nakamoto is. If they tell you they do, then they know something that I don't know, that from a public perspective that no one else knows. So there's never been a confirmation. There's been a lot of people who've said they're Satoshi. Most of these people have been disproven to a pretty good extent, but it's interesting to see some of these people come out of the woodwork and say that they're Satoshi. Satoshi is a pseudonym, kind of like, Jack or Jill or John, things like that in American culture, but it's obviously from Japanese culture. Based on the current numbers for Bitcoin, Satoshi Nakamoto would be the 33rd richest person or persons in the world. No one knows whether it's one person or a group of people, although I think some of the evidence tends to show that it is one person, at least in the very beginning. If Bitcoin were to reach $250,000 tomorrow, 3 years from now, 10 years from now, based on current economic standards, he would be the richest person in the world if nothing were to change in the standings. So Elon Musk better watch out. Satoshi's last official message was back in 2010. This was after one of the other Bitcoin core developers talking about he was going to have a meeting with the CIA to discuss Bitcoin, and apparently that wasn't something Satoshi was incredibly thrilled about. He's not the only person to ever work on the Bitcoin code. It is open source, and when he originally put the white paper out there, he did that, wanting input from other people to collaborate on the project, and people to help him out with it. In the original Bitcoin block, it's also known as the Genesis block, Satoshi Nakamoto did put a little message into the block. And this was, it was from the Times. It said the 3rd of January, 2009. And it says, Chancellor, he was talking about the German Chancellor at the time, on the brink of a second bailout for banks. So even in that original block, it shows that Satoshi had a distrust for current financial systems, and I think for individuals to take a little bit more power in their financial future, which I think is really cool as to what NuView is doing. So what is Bitcoin? I got a short little video that's going to go through what it is. Just hoping this will work perfectly the first time, because that's always nice.
What is Bitcoin? Bitcoin is the first decentralized digital currency. Bitcoins are digital coins you can send through the internet. Compared to other alternatives, Bitcoins have a number of advantages. Bitcoins are transferred directly from person to person via the net, without going through a bank or clearinghouse. This means that the fees are much lower, you can use them in every country, your account cannot be frozen, and there are no prerequisites or arbitrary limits. Let's look at how it works. Bitcoins are generated all over the internet by anybody running a free application called a Bitcoin miner. Mining requires a certain amount of work for each block of coins. This amount is automatically adjusted by the network such that Bitcoins are always created at a predictable and limited rate. Your Bitcoins are stored in your digital wallet, which might look familiar if you use online banking. When you transfer Bitcoins, an electronic signature is added. After a few minutes, the transaction is verified by a miner and permanently and anonymously stored in the network. The Bitcoin software is completely open source and anybody can review the code. Bitcoin is changing finance the same way the web changed publishing. When everyone has access to a global market, great ideas flourish. Let's look at some examples of how Bitcoins are already used today. You can purchase video games, gifts, books, servers, and alpaca socks. Several currency exchanges exist where you can trade your Bitcoins for dollars, euros, and more. Bitcoins are a great way for small businesses and freelancers to get noticed. It doesn't cost anything to start accepting them, there are no chargebacks or fees, and you'll get additional business from the Bitcoin economy. For your first Bitcoins and more information, visit weusecoins.com.
So let's get into some of Bitcoin's key features. This was covered a little bit in the video, but I'll just go over it now. As far as the key features, it's decentralized. So I'll touch on that a couple other parts in the presentation, but I think this is a big deal because so many of the processes in today's society are very centralized systems. I always like to use this example, but to try to describe centralization versus decentralization. Many people on the call might remember Napster. Napster didn't fail necessarily because it was doing something illegal. It failed because it had an extremely centralized system. all of their, software and processes existed on, a small group of servers. The government came in and said, we don't like what you're doing. They shut down the servers. Napster's over, right? Whereas Bitcoin exists on thousands of computers all at the same time. So it's completely decentralized. There's no way for one government, one person to. Oh, can we get back to that one? Do you want to go ahead and do the video? That's okay. It doesn't matter. Yeah, so that decentralization is super important. So existing on all those computers just really helps it to not be centralized. It's also peer-to-peer. I think, we've gotten so technologically advanced in a lot of ways, but I feel like money was maybe the last thing to move forward. It's currently faster to send an anvil to China than it is to send a wire. If any of you have had the lovely opportunity of attempting to wire money to China, it's an arduous process and it's extremely slow. On average, it takes somewhere between 4 to 5 business days to clear all aspects of the financial system. In today's society, that seems like an insane concept, at least to me. I think money should be as simple as handing it person to person. I don't think we need, 12 middlemen between us to decide who we're going to give our money to or where we're going to make investments, things like that. The other thing, it has a fixed supply. It only has 21 million Bitcoin that will ever exist. This makes Bitcoin have more of an immunity to inflation because, as you guys know, governments, and especially here in the United States, like the Federal Reserve, continue to print more and more money each year. You hear the national debt going up, things like that. I think what you tend to miss in that concept is that every year, $20 buys you less and less groceries, but most people don't know why it buys them less and less groceries. And so that's because by printing the money, at such a rate, it destroys the purchasing power of your money. So what if there was a decentralized peer-to-peer system that allowed you to escape that little matrix there? The other thing is it has very low fees, especially compared to traditional financial systems. So whether that's wires, MoneyGram, Western Union, things like that, that fees are extremely low in comparison. To give you an example, I think someone sent $100 million the other day. I think the fee was like right around $8 or something like that. So a pretty low fees prospectively. Also, it's a global digital ledger. So we'll talk about blockchain a little bit more in depth as we go forward, but Bitcoin transactions are recorded on a global public ledger, which is known as the blockchain. So anyone has the ability to view any transactions from Bitcoin's inception until now. So let's go through some of the practicals of Bitcoin, essentially like the nuts and bolts of how it works. So Bitcoin is usually stored in a wallet. This gives the user the only access to that wallet. We could talk about public and private keys in more of the Q&A session just because it can get a little specific. But essentially, your public key is the wallet address that people see of where they're going to send the money. The private key is your access to that Bitcoin. Bitcoin is typically purchased in online exchanges. This is going to be something like Coinbase, Gemini, Crypto.com. But there are also physical locations where you can purchase Bitcoin, live exchanges and ATMs. Live exchanges are much more rare, although I think into the future, you might see more and more of them. Essentially like how you walk into a bank branch, you walk into a physical location to purchase Bitcoin. I had the opportunity to do that. There's a live exchange in Paris that I had the opportunity to visit. A really neat concept, especially when you're so used to doing everything online. Bitcoin transactions typically take no longer than 10 minutes, which going back to the China wire example is a pretty big advantage. It takes 10 minutes to confirm, although we'll talk about how microtransactions can be a bit more of a difficult concept with that. And finally, and this is something I really want to touch on, Bitcoin transactions are irreversible. There's no such thing as a chargeback. If I send my Bitcoin to Frank, I can never get that Bitcoin back unless Frank decides to send me that Bitcoin back. So just something to really be key upon, because with Bitcoin, you're in charge of your money, but that's a bigger concept. You're in charge of your money. And so you have to take that responsibility not lightly. So I really love this chart. It talks about asset classes over the last 10 years. I think people can say good things, bad things, about Bitcoin and cryptocurrency. But just looking at its return on investment alone over the last 10 years, it is the best performing asset in the last decade, bar none. You could see, as the chart goes through years to years from 2011 to 2020, it's the best performing asset. It's a 6 million% return, 200% annualized returns. it's just astronomical what Bitcoin's had the ability to do over the last decade. And so there's nothing that anyone can argue that is a fact, and it's a pretty cool one at that. And so now we're going to get, I just want to show you guys just a quick chart. This is really going to show just the price of Bitcoin. Oh, let's go back one. Sometimes click through a little fast on these. Let's see. Perfect. Yeah, so this just shows the historical chart for Bitcoin. Really just shows, where it came from, and where it's gone, to see it come from, essentially being worth nothing. I think someone at one time sent another person 20,000 Bitcoin for 2 pizzas. That's an astronomical amount of money currently, with Bitcoin sitting, right around 31,000. But this just neat to see, from start to now where it's gone. You've also seen some pretty massive pullbacks in the price, as you can see there in the red candles. And I think it's just neat to kind of see where it's come from. Now we're going to talk about Bitcoin prices and scarcity. So we talked about, it being, one of the best, well, the best asset, where it is now. It's outperformed every other asset. I think something that's key with this part is because there are only 21 million Bitcoins that will ever exist. And the last Bitcoin that will be mined will be in 2140. The current amount of Bitcoin per block you get is 6.25. So every 10 minutes you get 6.25 Bitcoins for the mining process, which we'll get in a little bit further, but there's only 21 million Bitcoins that will ever exist. It's just such an important concept that scarcity exists within Bitcoin. So, like anything, there can be limitations, right? So let's talk about speed and cost. Currently, the Bitcoin blockchain is limited to 7 transactions per second. That's very, very low when you think of the amount of transactions that, say, Visa make, where it can be up to 2,000 transactions per second. So there's some scaling issues there, just like there were scaling issues, at the beginning of the internet. Bitcoin has its own scaling issues, and some cryptocurrencies and altcoins, which I'll talk about in a little bit, have attempted to tackle some of those problems. The other thing is going to be cost. Sometimes you get these bottlenecks in Bitcoin, especially when the price is really rising and tons and tons of transactions are happening at a time. It gets delayed a little bit in the mining process, and that can cause the cost of the transactions to go up. To give you an example, back in 2017, during one of the very large price booms, you saw Bitcoin transaction costs rise to an average of like $37, which if you're sending $10 to is not good. If you're sending 100 million, it's not bad, but that was the average transaction cost, which was significantly high. So one of the solutions for that is going to be something called second layer technology, and specific a technology called the Lightning Network, which essentially could allow up to hundreds of thousands of transactions per second, as well as a reduction in fees, which could really help for things like microtransactions. Right now, Bitcoin is a little bit difficult to use if you're buying your coffee all the time, because it takes 10 minutes to confirm a transaction. And I think neither party at Starbucks will be super interested in sitting there for 10 minutes, waiting for your transaction to confirm. So some of the big setbacks in Bitcoin's history, while obviously the price has had this, astronomical rise over the last decade, there's definitely been some big setbacks. First of which I'll touch on is the Silk Road. I'm not sure that a lot of people out of this space know a ton about, when this happened and what really happened, but essentially there was a website that was created on what's known as the dark web. Essentially, that's non-indexed websites, things you're not going to find on Google. He created a website where you had the opportunity to purchase anything under the sun using this new currency called Bitcoin. Unfortunately, that did lead to some nefarious activities, people purchasing things like drugs, firearms, fake identities, things like that. But it was the first, I'll say, internal practical use case for Bitcoin. It gained a ton of popularity during this time. There's no question that it led, to Bitcoin's adoption. This was apparently run by a man named Russ Ulbricht. He was caught by federal agents in California, and the website was subsequently shut down. At one point, it's estimated that 30 to 45% of Bitcoin transactions were being done on the Silk Road, which is a pretty insane number when you think about it. So there's no question it led to adoption, but it's, it might be a little black mark on its history. Another big setback for Bitcoin was Mt. Gox. Mt. Gox is a cryptocurrency exchange. At one point, it had 70% of the Bitcoin purchases that were going on the network. And when it shut down, whether that was kind of through an exit scam or it was hacked, I think there's a lot of questions around it. people lost, especially in today's money, billions of dollars with whatever happened to that cryptocurrency exchange. And then you're constantly having things called exchange hacks and scams. Bitcoin itself, its blockchain has never been hacked, but exchanges have been hacked multiple times. People have lost hundreds of millions of dollars. So there are risks inherent. I definitely say don't ever keep your Bitcoin or cryptocurrency on an exchange because exchanges can be hacked. Bitcoin itself cannot be hacked, but exchanges can be hacked. When we had some very large scams in Bitcoin, essentially, let's say it's a new cryptocurrency or cryptocurrency project that promises to be better than Bitcoin. They'll always accept Bitcoin or some other high-end cryptocurrencies for their token. And people have lost hundreds of millions of dollars in these projects, things like OneCoin, BitConnect, Plus Token. There's hundreds of these types of scams, and they'll always promise, huge returns, insane interest rates, things like that. And they always end the same way. So definitely stay away from that. If it looks too good to be true, it is. So let's talk about Bitcoin mining. I think this is definitely one of the more misunderstood parts of Bitcoin. I will try to simplify it as easy as I can. There's some really simple videos on YouTube you can look up too, like what is Bitcoin mining, explains it in like 2 minutes. The Bitcoin network itself is backed up by the largest concentration of computing power in the world currently. It sits at about 144 equihash. That number doesn't necessarily mean anything to you, so try to give you a practical example. It's about the same power output as 7 nuclear power plants, 21 million solar panels, or 2.5 million US homes powered. So there's an insane amount of just computing power behind the Bitcoin network. Bitcoin mining is, from a really simplistic perspective, a competition between computers to solve a cryptographic equation. Whoever solves the cryptographic equation gets the Bitcoin for that block in the blockchain. If you actually see the little picture in the top corner, that's a picture from an actual Bitcoin mine. Each one of those little circles represents what's called an ASIC computer or an ASIC miner. And essentially it is a computer that's sole purpose is to mine Bitcoin. In the beginning of Bitcoin, you could mine Bitcoin as something as simple as a laptop. Today, it's really become an industrial process, just like a lot of other sectors. And you really need millions of dollars just to even get started in Bitcoin mining. That network itself, though, is now just the Bitcoin mining industry itself is worth billions of dollars. So it's crazy to see it go from something you could mine on a laptop to being such an industrial process. The other thing too is, as far as mining concentrations, currently China holds just around 50% of the Bitcoin network. So there's a very significant amount of mining that's going on in China. And there's some other areas around the world that are pretty heavy into it. Countries like Iceland, Kazakhstan, the country of Georgia. The United States is definitely getting bigger into it. Peter Thiel, one of the founders of PayPal, he's a large-scale investor in a company called Layer 1, which is a Bitcoin mining project out of Texas. So let's talk about the rise of altcoins. So you'll hear a lot about altcoins when you get into the cryptocurrency space, but an altcoin really means anything but Bitcoin. There are currently thousands of altcoins. I've seen altcoins go from $0 to be worth thousands, and I've seen them go right back from being worth thousands to zero. So the one thing I'll say is, in the cryptocurrency space, this is not like any financial space you've ever been in before. If you can't handle seeing an asset lose 30% in a day, this might not be the right asset class for you. Some of the examples of massive success, you have Ethereum, which is currently the second largest cryptocurrency in the world, essentially a decentralized open source blockchain for smart contracts. We'll get into smart contracts in another presentation, but essentially it just gives, Ethereum is a way of building on top of blockchains, whether it's apps or games or things like that. And the network, the price went from 80 cents to, I think it currently sits like around 12 or 1300. We have Cardano, which is essentially an Ethereum 2.0, an evolution of Ethereum, go from 1 cent to 33 cents. A cryptocurrency called Polkadot go from 2 to 17. It essentially allows different blockchains to communicate with each other. And even a company like PundiX or NXPS, which you've seen go from microcents to huge jumps. So it's neat to see that. The one thing about PundiX, it's one of my favorites. It's a worldwide payment network that's like built on actual hardware. Essentially, they have an altcoin that's built on top of a hardware system, just like a point of sale system you'd see, at your local grocery store, like Clover or Square, that actually allows you to use blockchains for daily payments. So what do I look for in altcoins? So with there being thousands of them out there, this will just be like a good little educational piece for you so you can see what you really need to be looking at and what's important. So I'd say a big thing for me is development teams. No matter what, I think cryptocurrencies can live and die by their development teams. If there's not a lot of people who are very passionate working on the project, a lot of them can die. Second is the development language. The more popular development language, the more developers that are interested in working on the project. So it kind of feeds into the first one. The next one is, what problem does it solve? Is it cross-border payments? Is it chain management? Whatever the altcoin, whatever problem the altcoin solves, it needs to make sense. It needs to be practical. And then next is just the interest in the project for major industries. No matter what, if a project doesn't get any interest, it'll die off. So ways to possibly earn inside of the cryptocurrency space. Obviously, you have trading. You can purchase the asset, you can hold it, you can day trade it. There's a lot of facets just to trading alone. You could get into mining. There are companies that you can invest in currently that do Bitcoin and cryptocurrency mining. You can stake your cryptocurrency. So while Bitcoin is what's called, it works on a proof of work algorithm. That's what mining is. The computers work to solve those equations. There are also cryptocurrencies out there that work on what's called staking, which essentially means holders of the cryptocurrency actually earn for holding that cryptocurrency, and it's actually how the network works. There's also like rewards and loan systems where you can actually earn annual interest rates on cryptocurrency for allowing companies like Celsius Network, as an example, to loan out your cryptocurrency, and you receive an APR for that. And some of them can be very, very significant, especially compared to any other APRs you've seen before. And then finally, it's like payment networks I was mentioning before. You can actually earn from being a part of payment networks. So there's tons of ways to earn in cryptocurrency, but it's just like a small little tidbit. So what is blockchain technology? I have a little video here. Hopefully this one video works. I like this video explanation a lot, and I think it makes it super simple.
Modern technology allows people to communicate directly. Voice and video calls, emails, pictures, and instant messages travel directly from A to B, maintaining trust between individuals no matter how far apart they are. When it comes to money, people have to trust a third party to be able to complete a transaction. Blockchain technology is challenging the status quo in a radical way. By using math and cryptography, blockchain provides an open, decentralized database of any transaction involving value, money, goods, property, work, or even votes, creating a record whose authenticity can be verified by the entire community. The future global economy will move towards one of distributed property and trust, where anyone with access to the internet can get involved in blockchain-based transactions, and third-party trust organizations may no longer be necessary. The uses of blockchain technology are endless. Some expect that in less than 10 years it will be used to collect taxes. It will make it easier for immigrants to send money back to countries where access to financial institutions is limited. Financial fraud will be significantly reduced, as every transaction will be recorded on a public and distributed ledger, which will be accessible by anyone who has an internet connection. Think of it as wills and contracts that execute themselves, or dated proof of existence for ideas, much like a patent. Blockchain will become a global, decentralized source of trust, but not everyone is ready to embrace it. A huge proportion of trust services, from banking to notaries, will face challenges on price, volume, and in some cases, their very survival. Public authorities could find it more and more difficult to enforce traditional financial regulations due to the new possibilities offered by the Bitcoin network to bypass traditional financial intermediaries. Unimagined new networks will evolve to meet society's needs more cheaply and potentially more securely. Will governments, financial and legal institutions embrace blockchain? What will happen to the ones who don't?
So some of the big advantages for blockchain, I won't go into like the how-to type of part, but the big advantages are going to be transparency. So that can be both public and private. Bitcoin obviously being a public blockchain, you have the ability to see all transactions on the network. There are also private blockchains. So for businesses and commerce, you have to think there's a lot of companies that don't want all of their information being public, or the way that they store different information being public. And so they want to keep a lot of that internal. So they use private blockchains. So that there are options on both sides. Obviously, we talked about the decentralization before. Some of the other ones are going to be like reduced latency. I really like to use this example. We'll touch on some of the companies that are taking advantage of blockchain, but Walmart is a part of the IBM Food Trust. Essentially, they use blockchain technology to track food as a data set, like data points. And so I don't know if you guys remember, but back in, this was a couple years ago or 2 or 3 years ago, when the romaine lettuce E. coli outbreak was happening, the Walmart went ahead and looked at how long it took them to figure out, let's say, where their romaine lettuce was coming from. And what they found out was it took them, I want to say it was like somewhere between 5 and 7 business days to figure out where that specific crop of romaine had come from. And so they lost millions of dollars. Obviously, customers were, upset or afraid about the E. coli outbreak. And so with implementing blockchain technology, their ability to bring that down to minutes to figure out where it was coming from. So a huge advantage when it comes to reducing latency and just helping with some of those bottleneck points. Another one is identification. I've had the opportunity to work with a government body actually out of Seminole County here in Florida, who is building an identification service on top of a blockchain. So essentially allowing users to have a digital ID that's on a blockchain. So that will make it immutable in the sense of that no one else can use that ID. So you don't have to worry as much about like identity fraud and things like that. It also makes the processes a lot faster. So things like the DMV or getting permits or just trying to identify yourself online, period. You don't have to worry about proof of address or anything like that. It would all be done through the blockchain. And then finally, you have things like user-controlled networks. Essentially, instead of having government bodies, companies, or things like that control what X does, it's user-controlled network. The people who hold the cryptocurrencies or who are a part of that blockchain control how that network operates. So some of the companies, I'll go back one slide. See if it stays this time. Okay. So some of the companies that are involved in the blockchain space, you could say some really huge names. In finance, you have obviously companies like HSBC, Visa, Barclays. An interesting fun fact here in the United States, the largest holder of blockchain patents is Bank of America. So they're not shying away from this stuff. They're diving headfirst. They wouldn't put all their R&D dollars into something unless they believe it was actually going somewhere. Excuse me. We talked about supply chain. That's become a really big one. So you have companies like Unilever, obviously Walmart, Ford, BMW, other companies like that have gotten into the supply chain side of things. So they have the ability to track things on a blockchain. We've seen insurance companies, energy, even a neat aspect of the energies. You'll see companies that can trade energy credits across the world, which I think really helps streamline that system. Even in real estate, you'll see blockchain start to really take out corners of real estate. Specifically, when you think about title processes around the world are extremely arduous. They're a very antiquated process. And so to see blockchain speed that up and to make those processes more efficient, it's been really neat. But as you can see, you guys can look at the chart, another time, but there's really massive companies that have been getting into the blockchain space. So now let's talk about exposure to clients and consumers. So why would you consider a Bitcoin or cryptocurrency, especially for a self-directed IRA? So the first thing is going to be portfolio diversification. And I'll let the guys from NewView definitely touch more on the self-directed part after, if you guys have questions on that. I am in no way an expert in that space. But for portfolio diversification, Bitcoin acts very differently than a lot of other financial products. And so it just allows you to be more diversified. They always say diversification. So Bitcoin's great for that. The other thing is the potential of great gains, obviously being the best asset in the last decade. You have that opportunity. Positioning for long term, even though you're going to see it, fluctuate back and forth, over the long term, Bitcoin and cryptocurrencies as a whole has been a massive profit center for both individuals and now businesses alike. The other one's going to be tax savings. I'm not an accountant, another financial disclaimer there, but there are some tax advantages to it as well. So other ways to gain exposure to Bitcoin and cryptocurrency or blockchain specifically, there are cryptocurrency and blockchain related stocks. Something like GBTC, which is Grayscale's Bitcoin Investment Trust. It's the only NASDAQ traded Bitcoin stock. So like if you wanted to give your financial portfolio, whether it's like 401ks, IRAs, things like that, you can actually get it directly into GBTC. So that's an option that a lot of people use, but it's not my favorite way, and I'll explain why I think. And the self-directed IRA, I think, will be a good example of this. But I think it's extremely important to, if you don't have the Bitcoin, if it's not in your actual possession, if you don't hold the private keys to it, you don't own it. That's the way that I like to own Bitcoin. And so the GBTC is not my favorite avenue. I just think you should just own Bitcoin. There are other ways through other companies like Square, PayPal, or things like that, who have very large Bitcoin exposures. Riot Blockchain, Canaan and NVIDIA are going to be more on the mining side of things, and IBM for more of a blockchain exposure perspective. But lots of ways to gain exposure. And if you guys want to get into details on the question and answer part, we can do that as well. So I'm definitely ready for questions. Questions are always my favorite part of presentations. I know I talk very, very fast, and so sometimes people can miss things, here and there.
All right, fantastic. Thank you so much for that information, Jason. We'll go ahead and answer some questions. If you have questions, type them in the Q&A portion, and we will try to get to as many questions as we can. So first question, where did the fixed supply of 21 million coins originate, and how was that amount set or determined, and why?
So I don't think we have a good answer as to why it was chosen. Obviously, Satoshi, whether that's a person or a group of people, decided on that number. If you ever read through Satoshi's original emails, there's some aspect of him that's a gold bug, which is where he got some of that mining side of things from. And so as opposed to something like a traditional government currency, he wanted to see something that was still divisible, but that was fixed. So it wouldn't go higher than any certain amount, thus helping protect people's purchasing power. So that was definitely his concept behind limiting it. Why he picked the number 21 million, I have no idea. Maybe he likes the number 21. I don't have a good answer for that one.
Okay, I have another question here. Should I wait for a drop before I purchase Bitcoin?
Sure. Yeah, that's definitely a question I get a lot. So from a personal advice perspective, what I do, I always like to purchase it on red days because financially it just makes way more sense. In a general sense, over a long term, I don't think it really matters that much. I think in Bitcoin's entire history, it has 19 days in which it wasn't profitable to purchase Bitcoin based on the long term. So it's historically speaking, it doesn't really matter. Oh, and actually, let me touch on one more thing on that. I'm sure you guys have heard of companies like Acorns, which essentially will allow you to round up your purchases or things like that in order to purchase stocks. And so there's an option for cryptocurrency as well. It's a company which essentially does the exact same thing. So super simple. It's automatic. You don't have to think about it. And it's going to give you that, dollar cost average purchasing, across long term.
Okay, nice. Okay. There was a few people that didn't make the whole presentation. The recordings to all of our webinars are always posted the following day by the end of business day on newviewtrust.com. And then if you go to the blog section, it's usually the first one on the top of the blog, and you'll be able to rewatch anything you might have missed. And all previous webinars are posted there as well. Who limits the 21 million Bitcoin?
Oh, so that's built into the code. So that's what I like about it. Perspective is no one has the opportunity to change that. No one can make that number different. So it's just set into the code.
Okay. Okay, I have another question here. If I bought Bitcoin in Coinbase, do I own it?
No. Coinbase actually isn't my favorite cryptocurrency exchange. They have the ability to shut off your accounts, things like that. So for me, exchanges is a quick point to get Bitcoin. So you purchase it on the exchange and then you take it off the exchange to a private wallet. Getting a tiny bit deeper into the different types of wallets. A wallet can be something as simple as a piece of paper, where you can actually store your Bitcoin on a piece of paper. I know that sounds crazy, but it could definitely be done, and it's an extremely safe way to store Bitcoin because it's completely offline. You can also get into something advanced as a hardware wallet, which can be anything from $50 to $200. It's essentially a little computer that's not online except for when you plug it in and move your Bitcoin, and then it goes right back offline. So that's your ability to to store it. But no, I would never recommend keeping any significant amount of Bitcoin or cryptocurrency on an exchange because you don't own it in those places. Excuse me.
Okay, can you repeat what is the tax benefit in an IRA for Bitcoin?
The tax benefit, and you guys might be able to touch on this a bit better. Actually, I'm definitely from the accounting side of things. That's my least favorite thing. My accountant, I helped my accountant learn about Bitcoin and crypto, and then he had to learn the laws behind like how to work it. Because I'm like, I don't know the laws, I just know how it works. And then they did that. So to be perfectly honest, I don't know the answer to that one. Definitely reach out to your accountant, or if you guys know over at Nuvio a little bit better, you guys are happy to answer that one.
When you're using an IRA, it's either a tax deferred IRA or a tax free IRA. So it kind of depends what type of IRA you're using. But as far as like tax benefits, you have to discuss that with your financial advisor, see if it's a good investment for you to make and what type of IRA you'll be using. And as you know, it increases in value holding that Bitcoin in your IRA, then if you ever sell that, your shares, basically it's shares, correct, Jason? It's kind of like
to sell your Bitcoin. There's
just sell your Bitcoin. Basically.
It's like that in the sense of yep.
That's the way I see it.
The same way you would sell like it's simple. That's a simple way to put it. Sure.
So then whatever you sold would be the value at that point of what you gained from your initial investment. So it kind of comes down to strategy and just knowing when to buy, when to sell. I hate to say it, but it's very similar to the stock market. You can't predict it. You don't know if it's going to go up, if it's going to go down. So you kind of have to keep an eye on it, just like you would with the stock market. Okay, what is the disadvantages of investing in Bitcoin through a mutual fund like the ones you mentioned?
So the disadvantage is that you don't technically own it. You don't actually control the Bitcoin inside of for example, for GBTC, you don't control the Bitcoin inside of the, Grayscale Investment Trust. You can't decide you want to, move your Bitcoin to an exchange and trade it for Ethereum. You don't have that option. You only have essentially an IOU from Grayscale Bitcoin Investment Trust saying, hey, we have, Bitcoin for you. I think that Bitcoin Investment Trust works on like a 1 to 1,000 range. I think one share is 1,000th of a Bitcoin. But yeah, that's how that process works. It's not my favorite way, but for some people who maybe their only investment avenue or vehicle that they're remotely comfortable with is some of those traditional pathways, they'll go with something like that. It does give you the exposure to it. I think any exposure that you can get to Bitcoin and cryptocurrency, the better, obviously for diversification purposes. So it is a way, it's just not my favorite way.
Are there ETFs for Bitcoin investing?
There is, and there's some for blockchain as well. I honestly don't remember the names off the top of my head. As me being not the traditional financial guy, I don't actually play that much in like traditional markets like the stock markets, things like that, because I just prefer cryptocurrency, especially for traders. You have to think volatility is king, and so in cryptocurrency, I mentioned seeing your portfolio drop or go up 30% in a day is wild, and so it's just a different sport.
Can you place a stop loss on Bitcoin?
Yes, on certain exchanges. It just depends on which ones.
On the platform they're using, correct? Is it?
Yeah, it just varies from platform to platform.
What is the best way you can recommend to hold Bitcoin?
So my favorite way is actually, it's a little piece of hardware called a Trezor wallet. There are a couple electronic hardware wallets. That's my favorite. I think the interface is really good. And as long as you have your wallet backed up, so to back up a wallet, you'll essentially have a seed phrase. Let's say it's 24 words that are specific to your wallet. That little hardware wallet could catch on fire. It could sink to the bottom of the ocean. Someone could steal it, and it's irrelevant. Unless they have that phrase, they have no access to your Bitcoin.
Okay, if I'm interested in Bitcoin, I assume I can purchase a partial Bitcoin. How much is one Bitcoin?
So one Bitcoin is currently worth, I didn't actually look at it this morning, but as of yesterday, I think it was like 31,000. But Bitcoin can be divisible up to what's called a Satoshi, which is, for lack of a better word, an insane amount of zeros before a one. So it's extremely divisible, which is obviously what you'd want in a currency. But it has obviously some key features that make it a little different than your typical currency.
Okay, is Coinbase safe to keep your crypto, or do we need to do something more to keep it safe?
So, and I kind of answered this question before, but just move it to a private wallet. So whether that's, there are apps you can get on your phone, which are private wallets. So it's a wallet just for you. It doesn't have any identifiers, but you're the only one who holds any access to it. Whereas on Coinbase, Coinbase has, access to your account. It could shut down your account. I've seen it happen. And I mean, they're extremely busy over there, but Coinbase, to my understanding from their customer services, not been great. And I've seen people have millions of dollars held up in a Coinbase account with no way to access it and no answers from the company. So that's not a place I would ever want to be in. And so I don't ever keep any large sums of money in Coinbase. So I just recommend taking it out to a private wallet.
Yeah, I agree. I've bought Bitcoin and I got locked out of my account and it was a nightmare to get back in, but thank God I was able to get back in there.
Yeah, it's insane. Yeah, it's good.
Okay. Given the current price of Bitcoin, how would you suggest a new investor get in? What exchange is your preferred? I use Coinbase. I think Coinbase is probably the most popular.
It's definitely the most popular. As far as I'll say user friendly. I actually like crypto.com. That's my favorite one. They also have some good reward systems. Like to give you an example, they have a crypto credit card. We have the ability to spend your cryptocurrency with a card and actually earn rewards for doing that. So that's my favorite one, prospectively. That's where I like to purchase it. And the fees are relatively low in comparison to Coinbase. Fees are going to come to be a big player, obviously, in that. So you obviously want to get the lowest fees you can get as long as it's secure. But actually for user interface, for the easiest way, if you tell me you're getting started and I want to buy $5 in Bitcoin, do it on Cash App. To me, that's the simplest way to do it. Cash App is owned by Square, which is owned by, Jack Dorsey, who owns Twitter. Their profits that they've gotten from Bitcoin and from that specific side of Cash App is insane. I've seen more than 50% of their profits in a quarter come directly from what they're doing with Bitcoin, which is crazy when you think of how big Square is as a payments processor.
Okay, I understand you are not a financial advisor. If you invested today, what coins would you be buying?
Yeah, so once again, obviously my personal financial strategy is I think altcoins are where the play is at right now. I always think you should be stacking, and when I say stacking, just purchasing small amounts of Bitcoin. I think that's great. But Bitcoin is slowly but surely getting out of the average investor's financial ability to make, let's say, large sums of money. Even if and maybe I'm using large sums of money as a small concept, but let's say Bitcoin 4x'd in the next 2 years, right? It gets to $200,000. I mean, 4x is a great return in traditional financial markets. It's actually not an insane return in crypto. I've seen cryptos 4x in a day. That's very volatile, and obviously it can crash back down. But I think the play is in altcoins right now, and I think it's more accessible to the average investor. So you have cryptocurrencies, obviously like Ethereum, Chainlink, Polkadot. I like aspects of Cardano. Definitely do your own research on it, and you can use some of the tips I mentioned before. NSPX or NXPS, I always forget that acronym. That's PundiX as a cryptocurrency. I even like some of the more private cryptocurrencies like Grin or Zcash or Monero, but that's more from a personal liberties perspective. But those are some of the ones that I like.
Yeah, there's so many. What's a red day?
Yeah, there's thousands. A red day, so that's when the market is down. In general, altcoins will follow Bitcoin down. I like to use the analogy between gold and silver. So have you ever seen, in general, obviously there are exceptions to all these rules, but in general, when gold goes up, silver goes up exponentially higher. You're getting more volatility out of the silver. So altcoins and Bitcoin kind of work the same way. If Bitcoin's going up, altcoins are going up exponentially higher. But a red day is obviously just when the whole market's down. So if Bitcoin's down significantly, in general, you're going to see altcoins bleed pretty bad.
Okay. The next question is about asking more directly what type of Bitcoin they should buy. That's something you would have to discuss with Jason offline. Remember, he's not a financial advisor, but he did mention some of the few that he would purchase if it was him purchasing. So if you took note of those, then you might want to research some of those and discuss them with your CPA or financial advisor. Okay.
For sure.
Okay, so a little bit different question, and I don't have an answer for this either, but if you bought Bitcoin using a self-directed IRA, do they own it? Well, you're still using a wallet and you're still holding the Bitcoin. You decide how you want to purchase it. So I think it just kind of comes down to the vehicle that you're using or to purchase the Bitcoin. There are certain, I guess, wallets that you can hold Bitcoin and hold it and own it personally, but then the IRA would technically be the owner.
Yeah, I think you're getting into more of like a labeling question, like who controls it? Like, obviously you control it. I think it's a question of like labeling, like what entity, whether it's your LLC or however that works. It's, the entity might own it, but you obviously have, management or control processes.
Do you feel that Gemini or CoinDesk are subject to hacks?
Yeah, I mean, any exchange is subject to hacks. To my understanding, in Gemini's history, I don't know that they've even had maybe they just have great security systems, but I don't think they've had any like large scale outages or things like that that could come from like DDoS attacks or things like that. Coinbase has definitely had way more outages than Gemini. I think there's no question about that. And like a little fun fact about Gemini, which just a lot of people don't know, Gemini is owned by the Winklevoss twins. If anyone saw the Facebook movie, the Winklevoss twins are the ones that sued Mark Zuckerberg for stealing their idea. They're very early investors in Bitcoin and actually Bitcoin billionaires. Their net value is, in the billions of dollars now because of, Bitcoin's price rise.
Okay, this question I have no answer to. So let's see. Bitcoin functions as a currency for any type of transaction, but the best application is DeFi. Why not invest instead of in Ethereum, which provides fluidity specifically to DeFi networks?
That's I don't necessarily understand the phrasing of I don't know what the actual question you're looking for, other than are you saying should people maybe take more look into DeFi, which I would agree if that was kind of the phrasing of your question. DeFi has become really explosive in the last year, essentially decentralized finance. The space is very new and it makes normal volatility look like nothing. So there's things like yield farming or other things in the DeFi space that have become quite popular recently, and people have made hundreds of millions of dollars, but they've also lost significant amounts of money. So definitely do your own research in the DeFi space, but there's a lot of interest there, which, as I mentioned before, is not a bad thing when you're looking at a crypto project. So there's some DeFi projects I like Uniswap is an example.
Okay. Okay. There are crowdfunding platforms getting a lot of attention on Facebook where people are earning Ethereum in exchange for promotions of the platform. Do you think that this is a scam or worthwhile to investigate?
I guess if the question is, they're making Ethereum for promoting specific I understand the question a little bit better. So sometimes you might make like commissions off of promoting specific projects. I would stay away from those wholeheartedly. I think 99.9% of them are likely to be scams, and the 0.1% that's not. The one thing I'll say about crypto in general is like we're still in the wild west of crypto. Just like when the internet boom originally went on, you'll see companies that are worth millions of dollars and then they don't exist, a year later. So I would stay away from anything like that because in general, they've historically been scams. And the one thing I was gonna say, sorry, is the 0.1%, because it lends itself to this kind of crazy, financial world, the 0.1% that's not already a scam, that crazy amount of money flying in, I think lends itself to some of people's worst interests. They really start to get a little bit greedy and then bad things happen, people making bad decisions. That's the other thing I'll say. If wasn't a scam originally, it kind of becomes a scam because people get greedy.
Okay, so for individuals transacting with Bitcoin, you said anyone can see the transaction. Is there a way to prevent prying eyes from my purchase activity?
Sure. So I can elaborate on that. When I said anyone could see the transaction, the Bitcoin blockchain it's a public ledger. Anyone can look at it, but it doesn't have any identifiers on it. You see a wallet address and a wallet address. One Bitcoin moved to this wallet address. That's all you see. It's a group of numbers and letters. It doesn't say Jason Sallman Bitcoin account, 32149. It's just a wallet address. Now on an exchange, you obviously have to verify yourself because of KYC and AML rules, especially here in the United States. But once that Bitcoin is moved to another wallet, then you can get into a question of could it identify you at all, which in a general sense is no.
Okay, so we kind of already answered this question, but if somebody did have their coins in Coinbase now, they wanted to move it to another platform, what do you suggest they use?
I mean, from like a simple ease of use, I would just download an actual wallet. Probably my favorite one is going to be the Edge wallet as far as like an app goes, which is essentially an app on your phone that you can move that cryptocurrency from the exchange to your wallet. So it's called Edge.
The next question is exactly if I were buying Bitcoin right now, how would you buy and how would you store it? You would store it in a wallet, and you could buy it with a self-directed IRA. It's just like a cash, or you could use your own cash to buy it. Are there any other ways you can think of that you can purchase Bitcoin other than cash?
I mean, well, maybe I'm misunderstanding the question. When you say cash, you're talking about like, so online you're using like your debit card or credit card. Is that what
right?
You mean? Oh, okay. I mean, there's definitely different websites that have more of like an e-commerce feel to me, the ability to trade assets for Bitcoin, or even like, people now have even gotten into, I mean, real estate. When I mentioned real estate, in the blockchain perspective, in the Bitcoin perspective, people have been selling their homes for Bitcoin. There's 2 New York City bars right now, I think, that are for sale for $1 million in Bitcoin or something like that. So that adoption for Bitcoin is coming because people realize, let's say the typical real estate transaction, you have somewhere between 8 and 15 people that are involved in the transaction. Well, what if it was just you and the person you were buying the house from?
Yeah, and I've also read recently there's some Bitcoin REITs as well that are out there.
Yep. That's very new, but yeah.
Okay, if you don't keep Bitcoin in an exchange, how or where can you purchase and store it?
So you can purchasing on an exchange. There's nothing bad about that, but you just always want to move it to a private wallet. So whether that's a hardware wallet or an app on your phone, I like the hardware wallets. I think it's a little bit better security and it's offline, but definitely just move it to your own wallet, not on an exchange.
I always get scared holding it in an app or a phone, and say I lose my phone and I lose access to all the things that I have in there, and maybe I don't have the password saved. So that's always kind of risky. So always store your passwords somewhere safely, in the cloud or somewhere where it can't be accessed. So I do definitely encourage that. And this is going to be the last question, and we'll have to wrap it up. But let's see, how do you trade Bitcoin in your IRA? So I can answer that question. You open your self-directed IRA. You will establish what's called checkbook control by creating an LLC for the IRA. Once that is created, the funds will be moved into a business checking account where you have complete access to that IRA money. Once you have access to those funds, you're able to purchase the Bitcoin in whatever wallet you choose, and you would trade it just like you would if you were using your own bank account to do this, but you're using IRA funds to do it in an LLC. So that is what the process would look like. We have the experts that can help you create the LLC. If you do need help specifically for Bitcoin, you would reach out to myself or Lisa, who is our director. And if you would like to download our free e-guide, just text capital SDIRA, your first name and your last name, to 484848. The direct contact information for my director, Lisa Rodriguez, is 407-412-7177. You can also reach us at newviewtrust.com. Her email address is lrodriguez@newviewira.com. Jason, thank you so much for all the information and answering all the questions. If anyone still has questions for Jason, feel free to reach out to him one-on-one, or reach out to myself if you have any questions specifically on self-directed IRAs.